Okay, welcome to Macro Measure. Let's do our quick disclaimers here so we can get started. I want to apologize right off the top just because I'm sure things will be a little bit different here with me doing it versus Wayne. Wayne kind of been, I think, just going through figure out the kind of template to get these videos done. I'm going to try to follow along with kind of what he does, but I'm sure I'm going to diverge off of his path a little bit there. So, but hopefully I can give you guys a little bit of insight in terms of what we are looking at as we talk and go through these charts every weekend. So he's traveling. So again, I do apologize for me stepping in, but just wanted to get this out to you guys so you guys had it and that you can again maybe take some of this. So this is we kind of use the ETFs for mainly the idea that they're tracking the indices very well, and that maybe some of you guys want to trade these ETFs. I know there's a lot of guys that are trading these and have always asked for these levels. So kind of killed two birds with one stone in terms of giving you some good levels in these. So let me get into our, I use Thinkorswim. So let me just kind of switch over to that here real quick and get into the broader market of what's going on. So this past week had a very, very ugly week. You can see we breached the 50 and the 100, 200s way up here. So we're getting pretty far in terms of the divergence away from this, but you can see in the past, which we were way down here back in June and July where we were. So we start to look at interesting levels, and on our way back down, if we do start to have a rollover this week, obviously we're going to have the Fed on Wednesday. So we're going to get some really good insights into what the hikes are and what Powell comes out and says about that. So we could get a little bit of a follow through, maybe a little bit of a sell off here coming into a Monday. Then maybe Monday, Tuesday, we have maybe some type of reversal going into Wednesday with again, depending on what the Fed says, is it going to be 75? Is it going to be 100? What does Powell have to say? Is he aggressively trying to move the market down in terms of wealth destruction, which they really need to do in terms of trying to pull liquidity out of the market? They are going to continue their quantitative tightening to 100 billion per month, or roughly there around. And that's definitely something we have to be aware of. On the way up, we've been talking about this market with QE. On the way back down, since they've been pushing the market, it's been quantitative tightening and trying to tighten this over the last several months. And that's when we really have continued to see some market move down in terms of the bigger picture. So when we look at this levels, kind of what I'm looking at, let me zoom out a little bit more in terms of a year. You guys can see that kind of bigger picture downtrend. And the last thing we really want to see is a retest, right? We don't want to see it back down in here. If you look at the market outlook that I sent out over the weekend, this is one where, again, you've said valuations putting us down below 3,000. So that puts us down below 300 on this. That would be very, very ugly in terms of fair value. But, you know, the bigger picture on here that I think you got to be aware of, again, I'm not going to draw a bunch of charts or lines on here, but if you were to draw a flat line down below these levels, let me see if I can just do that one for you guys, just to give you some perspective of, you know, the bigger picture of what could unfold. And even if you drew just something like this coming down below the lows, right, just to kind of pick up a couple of these, oops, that didn't work quite well. But even saying something down, you know, down through here, just to give you just a rough, not perfect, but the idea that these big swing lows, do we have another one that could expand from here? From the top perspective, what you're basically forming is a megaphone where this thing has been trending and getting bigger pushes, bigger sell-offs. So the last thing we want to do is see this thing get taken out in terms of, you know, some of these critical horizontal levels in terms of the bigger picture. We did get severely overbought here, right, on this big short squeeze, and we've had the sell-off. Now we're having this kind of very similar top. These tops all kind of line up and then have sold off since. So at this point, we are actually diverging in terms of the RSI and our price pattern, right? So the RSI is actually making a higher low from where you got to from here and slightly better here. So this is definitely something where we would be looking at in terms of this move here versus the bottom on this side, right? So if I can try to draw it down here for you guys. you can see that divergence where one's pointing one way and one's pointing the other. So we're going to have to see kind of how this battle plays out. Do we get a little bit of a gap fill, maybe a little bit of a squeeze coming back up to move this back higher in terms of the bigger picture? So I'd say something like the 2800, again, zooming in here a little bit to give you some perspective. I'm sorry, the 380 right in here in terms of that area. 376.39 after that, then the kind of where you've seen several of these lows down here around 372. Obviously the bigger picture, you see some white lines in between, but bigger picture, we don't want to see it back down here at this 362. That's going to be your what I've been calling your oh shit level in terms of the bigger picture. So you can see we get back down below there, this thing's going to start to look pretty ugly. And if I were to extend kind of this trend to the right, you can see that maybe we do start to have a bigger fall coming down into here around 3,000, right? The bigger picture where this starts to marry up down here. This is about 3,200 on that one. So definitely have to be aware of that. Now, moving into the diamonds, and I would say diamonds probably had the worst week of all, given the proximity to where it took out this September 6th low and starting to look like we could retest much lower. So maybe get down to that 300 level. We're at 308 right now. 300 would be very, very important to hold from a psychological level. But you can see we did get down to 296.39, your kind of OS level down in there. So definitely be aware of those. Again, similar type of action in terms of the short term where you have this downtrend in here, but you have a slightly diverging RSI that's just slightly improving. So if we get any kind of positive momentum here moving back up, that would cause a divergence. And then you'd want to see how this plays out. Obviously, with the Fed bigger picture, do we see the short squeeze or not? Getting into our IWM, I would say had held its own the best compared to the rest of the market. You can see not only did we kind of hold that level in terms of the bigger picture, right? In terms of this September 6th low, it did get down below, but they managed to close this thing back up pretty strong. So that is, small caps tend to lead the market down, especially when you are having higher interest rates. So that is definitely something I'd be very concerned with bigger picture. Does this start to play catch up with the rest of the market? I mean, theoretically should be somewhere down around, 172, 173, something like that pretty easily. If not, compared to where the diamonds are, right, you're looking at somewhere around 167. So definitely got to be aware of the potential to the downside there. 174.28, 172.85, 171.86, 169.57 are levels we all gave in the market outlook for the levels to look for potential to the downside. Again, you can see similar type of divergence on the lows versus the RSI. So again, the RSI is saying that maybe we could potentially have a move back up to the upside. Not oversold quite yet, moving down that way, but not as oversold as where we were on the 6th action, right? This was just continued selling. So this is just because of the speed at which it got here. So is the speed, again, maybe something that could help us on the way back up, where buyers are willing to step in, especially getting back above something like the September 6th and staying back above those lows will be critical in all of the different ETFs. Last ETF I have for you in terms of the market is the Qs. And this is one that, again, very similar in terms of the action here. You can see slightly diverging on this one. Not as, let me zoom out a little bit on this so you guys can see this a little bit better. Not as clean cut as I would say as your other ETFs in terms of the divergence here, but it is still a divergence where this is pointing down and your RSI is pointing back to the upside, where it's not as bad in terms of being oversold, but we are taking out lows. So definitely critical. So again, bigger levels on this one, that 279.82, then you're looking at the 275.23, then the 269.28 is your big OS level on that one. Back to the downside again, if we start to see a little bit of a push here, a bullish push, we may be able to see a little bit of a short squeeze in terms of that. And hopefully you guys are looking at the sector situation video as well, kind of go through the different sectors that are performing slightly better, could see a little bit more of a pop, or ones that are completely oversold compared to where we are on the market, like the XLC, right? Maybe they're going to see a little bit more of a bounce than some of these other stocks. Getting into a couple of the names I think that we typically cover, the yields, TNX, the 10-year, and this has been a phenomenal mover. All right, this is going back all the way, and I didn't go and do that. We'll go to the weeklies. You can see how far this goes all the way back, made a higher high and it goes back to 2011 in terms of that action. So again, depending on what Powell says, we could see some dramatic movement, which we did see this past week. It was pretty dramatic in terms of the action. So it did make the higher high 34.90 versus the 34.83, which is slightly back here in, let me see if I can show you that right here, right back in here in June. So we'll see, do we see a further pop on that one, or does Powell kind of quell the market and kind of bring rates in line here, maybe start to move them back off a little bit. The other thing I definitely think you have to be aware of is the DXY and the dollar index. This past, not this past week, the week before, we did make a high of 110.786 there. You can see that on your screen, and you can see this goes all the way back to 2002. Right. So this is definitely one I think you have to be aware of, that if the dollar keeps moving in strength like this, I don't know if I can show you the monthly. Nope, not on this platform. I can't. But again, this is one I think that as the dollar remains strong, that is bringing down a lot of the commodity prices. So that's helping the US, not necessarily helping the rest of the world. So I think you have to be aware of how the dollar is moving, how that's playing into the bigger picture. And then the last one I want to share with you today is the volatility index. And this is one that we saw it would be helpful if I put it on the right screen, VIX, there we go. We saw a great rally, right? It did get up to a high of 28.45, but they did sell into it on Friday, kind of stabilizing the market. And obviously with a VIX that moves up, the VIX traders are just trying to push this thing back down. So it did close pretty close to the 100-day. So we'd be watching that. And again, any further sell-off, maybe see a retest of the open or some of these other highs in the 27 area. But we'd have to see a significant newer lows for this thing to really get a pop, maybe retest the 28 level. And knowing that the Fed is coming out, I think we're probably going to have a little bit of stabilization here on Monday and Tuesday in terms of the broader market. So on that note, I want to wish you guys good luck this week. And thank you for tuning in. Good luck, and we will talk to you soon.